Hi, I'm your host Satwan, and welcome to this episode with Alex Harris from FIAT Ventures. Before you listen to the show, please note that the audio version of this podcast is available on the web. Type thepayments.show into your web browser, and you'll get a list of all the episodes with links to your favourite podcast player. If you want to join a discussion about this episode, please visit thepaymentsshow.substack.com. You will also find the PDF transcript of this episode there as well. Thanks and enjoy the episode. Alex, welcome to the Payment Show.
Thank you so much for having me. Great to be here.
You're the first venture capital company on the podcast, which is great.
Great, no pressure. I like it.
I had this vision of someone like Laurie Bream coming from Silicon Valley.
Those are big shoes to fill.
And maybe the spirit of Eric Bachman is here somewhere too. So
yeah. Hopefully, I'm somewhere in between those two.
Well, we'll see. You are actually based out of Silicon Valley?
Yeah, right? I am actually. I was going to say I'm at least location-wise, out of San Francisco. So I'm
sure you've got plenty of great stories about what goes on there in relation to the show.
Absolutely, that show. I love that show. I miss it all the time. I wish they would have redone it for COVID, because the show was scarily accurate in terms of so many ways, and things shifted a little bit during COVID, and I wish they would do kind of a modern take of it now.
Yeah, it would be cool, because they made it at the peak of big tech on its kind of rise, and I never actually, I think there were 4 seasons. I never got to see the 4th one. That's where the guy that actually played Eric Bachman didn't come back, right?
Right, yeah.
Did you manage to see that season?
Yeah, I think I watched it all. It definitely went through the cycles of, it was a nice cycle of success and failure, and, struggle at all stages, and what can be a good problem is actually a bad problem when they'll tell a story of someone who took on too much capital, too high of an entry point, and then it ended up being problematic down the road, and all these things that are actually, they're not made up. They're, they really came from, they're very real problems.
Yeah. Well, I'll definitely have to finish the story there and get onto it.
Absolutely.
Soon.
Highly recommend.
I did just finish watching We Crashed, which was brilliant on Apple TV.
I have not seen that.
Do you know what it's about? It's about the rise and fall of WeWork.
Oh, yes, that's right. Yes. Yeah. I have not seen it, actually.
Absolutely brilliant. Worth subscribing to Apple TV just for that.
I'm definitely
highly recommend.
Add that to the list.
Well, we'll move on from the TV and movie reviews. I just couldn't help it based on what you do.
Always a fun topic.
So I'll introduce you to the audience. So Alex Harris, you're the co-founder of FIAT Ventures, and you're based out of Silicon Valley, as we've just discussed. And it'd be really interesting to find out about how your company came about, because obviously there are many great venture capital companies in your part of the world. And I think it'd be really nice to start off with what FIAT Ventures is all about and how it's different to the venture capital companies that are out there.
Absolutely. Yeah. Thank you. It's, we have a different journey to venture capital than most. It came from, so full step back, I've been in growth my whole career. Prior to starting FIAT, most recently I was at Chime, the digital bank here in the US, joined Series A, led paid growth and partnerships there from Series A to Series D. And Chime has now, become the largest digital bank in the US. And through that, a few things happened. One was refining kind of the growth playbook of how do we get there. The second was building relationships with all of our partners, and being a good partner meant giving them good advice on not just what TV shows to watch, but also giving them good advice on, hey, you should talk to this partner. Have you thought about this? Let me make this intro. Found myself really enjoying kind of that advising, and decided to actually start an advisory shop first before the fund. So that is FIAT Growth, which is our growth consultancy. And that came first. Fast forward to today, the growth consultancy, we've worked with about 150 companies to date. We have 15 different service lines, essentially full stack growth and marketing services, strategy, and execution. It's everything tailored to the needs of growing startups, and we've added services according to those needs. what we've done in tandem is we've built these growth playbooks, but we've also done what we call the ultimate due diligence of we work with these companies, we see the data, we see the analytics, we see the team dynamics, we see the real. We see past the data room and a deck, and we get really our hands dirty and get to know, hey, this is highly investable. Hey, we should jump on this, try to lead this round because there's really something here. At the same time, when we look at companies in the space, we have that context where we see these numbers are believable. This growth strategy is going to work. You're going to struggle here. So we built out that track record of success from growth and heard from enough people, you should leverage that in order to start investing in these companies. We were taking the right to invest in these companies that we were working with, and that was kind of our first step into venture. And really that led to us founding FIAT Ventures, raising money from our LPs who love us doing the ultimate due diligence. And in that way, we say that we've actually kind of reverse engineered venture capital, that it was the growth side first, the consultancy first, the due diligence first. And then we said, hey, there's some great advantages here. We should put some capital behind this. And so went in complete reverse of operator turned operator in the consultancy space turned, let's add some capital to this. So in that way, our journey is different, and also our understanding and our value add is quite different in terms of it's not just an introduction. It's not just a few nice talking points. It's very tactical. It's current. It's informed by the ever-changing market. And we think truly the difference is we're not just picking winners, we're building winners as well.
Okay. So basically you don't sit on a throne and open the trapdoor with people presenting in front of you. You actually help them build if you decide to invest.
Yeah.
I'm quite a visual person, so I just imagine these scenarios.
I like the visual. Yeah, I mean, basically, like I think, I say so. Technically, I'm a venture capitalist. Technically, I never say that. I think you heard me just even hesitate as I said that just now. I never say that because really, I'm just a growth guy and an operator working with other operators to build companies and make an impact. Capital is just a piece of that. So really for me, it's just whether it is, investing our capital because it's a necessary unlock in the growth journey, or whether it's helping them craft their story so they can go out to investors themselves. It's just a necessary piece in most cases of that journey to building a lasting company. Yeah, not on the throne.
Yeah, cool.
Yeah.
So thanks for that explanation. My understanding from the research that I've done is that you and your co-founder, I mean, he plays quite a key part in this story. It's not somebody that you sort of bolted on afterwards. I think you both worked together before you founded this company. Is that right?
Yeah. So I love our story. It actually goes back about 20 years. We met in college at UC Berkeley. My co-founder, Drew, he played for our football team in college, and I was a student manager for the team. So I like to tell people that we met because I did Drew's laundry, which is not untrue. I did, among other things, I did laundry for the team, including Drew's. Also spent a ton of time on the practice field and, in the stadium together, getting to know each other over 4 years. So we became close friends, built up a lot of trust, which is, having, when I look at founders, that's something I look for, those dynamics and the kind of trust where, Drew and I can tell each other anything. We can be honest. We can say, not holding back without hurting each other's feelings, of just recognizing, hey, I'm better for this. You're better for that. That this is a flaw that you have. I definitely have many flaws and appreciate any time Drew calls them out. And so we stayed in touch. I was at Chime and Drew was at Steady, which is building a product for the 1099 world. And we started having these conversations similar to myself enjoying those partnership conversations at Chime. Drew was doing the same at Steady. And we started having that conversation of, hey, we could actually make this a thing. what if we could do, we're talking about some of the favorite stuff that we do, some of the opportunities, some of the potential efficiencies at scale if you did some of this partnership work together as our kind of our initial offering, and decided to leave our day jobs and start this together. It's been 5 years now.
Great stuff.
Yeah.
So I want to get into the meat of it now. So you're a venture capital firm focused on fintech, and it'd be really good to know some of the companies that you're working with and helping to grow in the payment space. I saw a few, such as Early Bird, which is saving money for like an app that helps children save. You're in InsurTech, you've got Sunlight, which is solar financing. So it'd be good to understand in the actual specific payments area, what you're investing in. Because, I mean, from what I've seen in the market, there's what seems like 1,000 solutions built around a Stripe wrapper or a wrapper around Stripe.
Yeah.
Buy now, pay later has been done to death.
Yeah.
And there are all over the sort of Western world anyway, lots of neobanks, and they don't seem to be that profitable, most of them. So it would really be good to understand what you're investing in that's really innovative in the payment space, rather than a copycat solution or something that's just a sort of a feature tacked on that maybe Stripe missed.
Absolutely. Yeah, it's interesting, especially coming from Chime, which is, publicly, visibly, one of the core tenets of fintech. I think a lot of people make the assumption that, okay, fintech is just consumer banking or digital consumer banking. And, that is just one tiny slice of fintech, when the reality is, we call it fintech plus and fintech adjacent, that nearly every company is a fintech in some way, whether it's how they're processing payments, whether it's a solution in this market, whether it's hardcore technology in terms of like a KYC provider, fraud prevention, and something like that, versus some of the examples that you mentioned. So it's in investing for teens. We led the Series A for Copper Banking, which is a banking product for teens that helps them. It is both the knowledge component in helping build a financially literate next generation, helping them earn, helping them invest, really a number of different solutions that are kind of holistically built for that teen. Sunlight is actually, it's a card on file API, meaning it is when you update your card, when you get a new bank, instead of having to go into Netflix every time and update that card, it's keeping it on file. So it's much better for the consumer experience, but it's also helping the bank capture that top of wallet, helping them retain the card, because otherwise it's an opportunity to potentially lose that expenditure, lose that interchange revenue. There's a number of others in the space. We touch on the lending space in terms of HEIs here in the US, which is home equity investments, a company called Spotero. And that is essentially buying into, it's alternative to a HELOC. It is buying into a piece of your house and the appreciation that it has. A number of others, lunch payments, which is tackling the B2B payment space, starting with education and government. There's a ton of opportunity there in terms of, from a tech perspective, from a timing perspective, a lot of pieces that are broken in the B2B payment space.
It's an understatement of the year.
Yeah, right. Yeah, right. We could probably talk about just that for a while, and they've made some tremendous progress, and we're really proud of that team. A number of others tackling the healthcare space and how we look at healthcare as consumers, both the expense, how we understand it, the transparency around it. Again, there's a payments piece to that. InsurTech is a huge piece as well. Working with companies like Sigo Seguros, which is tackling the auto insurance space for the Spanish-speaking population in the U.S. They've made incredible traction, helping their members save a ton of money, have that transparency and understanding, and really have built a better product for that segment. We've invested in about 30 companies, so I could probably ramble for quite a bit of time on them.
Yeah. No, that's a real big mix there. I might just pick on one or two. So
sure.
You mentioned lunch, that was payments for government. Yep. What's so unique in that space? Why not just, again, stick Stripe in there through an API?
Yeah. Some of that is actually, so it's about the movement of money in terms of the timing of it as well. A lot of these payments, you have vendors that you move money with, and in some of these old legacy spaces, the timing is just brutal. You have accounts receivable issues. You have issues that can really be solved with a combination of technology and capital markets that can take schools, government entities, and help you get your payments much faster than before, which is really meaningful. There's a ton of companies in the space who are looking to do that and kind of bridge that gap when there's confidence that the money is coming to actually help you bridge that gap of timing, which can really be quite impactful for government entities, SMBs, schools, a number of businesses that really just need to modernize their flow of funds.
So in that example, would that be taking advantage of real-time payments? Is it RTP? Is that what it is?
In a sense, it speeds it up. It's not, in terms of, I think if you're alluding to the instant movement of like ACH, it's actually a little different from that. But I think that it is part of that broader shift to real-time payments where money doesn't need to be as complicated and delayed as it once was.
Okay. And how do you decide which payment companies to invest in? It'd be good to understand your criteria, if you can share.
Oh, yeah, most definitely. I think it starts with, everyone will tell you it's team and TAM are the two biggest things. So, understanding, is there this large market there? Do you have a believable path to capture enough of that market that we think this will, generate a good return? And so some of it is, telling the story. I think some people think that they come up with the idea and the pitch and they sell you on this is a massive market that needs this solution. And a lot of people are like, cool, I'm there with you. The question though really is, are you the team to do it? Not just, are you the team who has identified this need, which we'll validate, but, tell me why you're the team to do it. Ideas are, for the most part, not worth much. It's about the execution of it. So getting to know the team, understanding their experience, their dynamics, to my point of knowing Drew for 20 years and the way we communicate, seeing their dynamics, how they deal with challenges. One of my favorite questions to ask a founder is, what keeps you up at night? And that is an opportunity to show a few things: self-awareness, humility, and knowing that they're really thoughtful and they see around corners, because nothing is a straight line. You're not going to be able to, just map out on a deck, this is exactly how it's going to go, and there will be, nothing, no obstacles thrown in your way. And so that's something that we look for a lot, is how will you handle those pieces. That comes hand in hand with kind of our strategic advantage in terms of growth and go to market, to understand, do you have, not just are you the team, but are you the team and do you have a plan that you're going to put in place to capture this market share? And we dig into the weeds on that from a growth perspective. We'll make recommendations, see how they adapt to that in terms of, are you coachable and open to that feedback? And really, are you someone that we can build together with? It's not just about picking winners, it's building winners. So, validating the market, validating the team, and then validating their approach to that. Final piece is just, validating to the extent that at the time we're talking to them, the product exists, validating that they can build good product, that it is something that their end user wants, understands, can use well, and a conviction that they'll continue to evolve and progress the product as well.
Okay. I want to re-clarify. I want to make sure I've got your organization completely nailed here. So it sounds to me it would be the same as going to another venture capital firm. They're going to look at the team. Does it look like a team that will do it? Are they strong, et cetera, et cetera? Many of the points that you mentioned. And then we'll just fire money at it. And you're saying we'll fire people and expertise at it. Is that the key differentiator?
So it depends. Some of about 60% of our investments will actually work with them on the growth side first. So we'll get that seat to see truly how they're operating together. We'll look at the analytics and data and validate that they're real, see where there are challenges. So that's definitely a differentiator in terms of that path, that they come through that route first.
So another VC wouldn't do that? They wouldn't validate their information?
They don't typically have that kind of hands-on experience that we have first in actually working with the companies. In some cases, we're working with the companies for several months before we're investing, and really having months of hands-on due diligence is pretty rare. So we have that approach for the companies we're actually working with. For the companies that come to us and we have not yet worked with them, we can stress test that against some of what our team knows works and what doesn't. Again, that's kind of the unique insight of having those playbooks that we've developed and working with 150 plus companies.
Yeah, you've got multiple baselines which you can see.
Yeah, and that's definitely helpful. And then, regardless of your path to a check from our venture fund, we have our platform team, which basically is there to support and build with you. So in that case, what our platform team is essentially, we are all operators. So it's beyond that introduction. It's getting into the weeds, and whether it is everything from, hey, a therapist, because I feel your pain as a founder, and I know the journey can be lonely and stressful and difficult, and just that the understanding, to talking about our next raise and what's the story we tell and how do we interact with investors, talking about go-to-market strategies, again, leveraging the expertise of Fiat Growth. Any number of things that come up, we can give the supportive lens to a founder of tried and true techniques, and also true understanding of their challenges and pain points.
Yeah. Okay, great. Thanks for that.
Yeah.
Sorry to harp on about it, but I just wanted to make sure I got it right.
No, absolutely. No, it honestly, our model is unique, but that doesn't, that comes with complication.
Yeah. I want to ask a more general set of questions around the payment space. I mean, there are so many technologies. You've got crypto, and then you've got so many technology areas that link to payments, such as security, fraud.
Yeah.
Embedded payments is a big one now.
Yeah.
I've not used one yet personally, like insuring something I buy on Amazon, but I see them everywhere. It'd be good to get an understanding from you what your team is looking at investing in future, or what trends you're seeing in the payment space, which you're excited about and maybe people are not aware of.
Definitely. I'd say it's interesting that you said that you haven't used embedded finance, because I think that's definitely one of the biggest trends we see. Is every company is becoming a fintech in some ways, and others are expanding their use of financial services because they're embedded in their everyday products. Whether it is, say it's a platform it's an accounting platform for my SMB, and actually I'm going to look at lending options and lending that's integrated through an embedded solution directly in the platform. So I don't need to go look elsewhere for a loan. I trust you because I've been using your platform for a while, and really embedding that directly. This team doesn't have to build their expertise in lending. Instead, they can partner with someone that can really expand that service. That's happening in tandem with all of these companies where, the market is pressuring them to have revenue that they, in many cases, as you identified, may not have today. And from there, the, embedded solutions like that offer the ability for these companies to really open new revenue streams, retain customers by offering them a more diverse set of products that they can embed quite quickly. We see that as a huge piece and of the future of finance. And there are many who, probably may not even realize that they're using an embedded solution already, some kind of white label tool, some kinds of connectivity in terms of say Plaid for your finances, a number of tools that are really kind of changing the way finances operate. To your point in terms of kind of the infrastructure, I'll say, of, fraud tools, KYC providers, a number of different pieces. That, again, has become more and more critical. We've seen tremendous companies, they build a great product, they have a great acquisition engine, that are actually significantly damaged, if not completely killed, by not having kind of the back end from compliance, fraud, risk, all of that buttoned up. These solutions that are keeping up with the speed at which other people are trying to attack these products, that can continue to innovate and provide those solutions, those are becoming more important than ever to survival for these businesses, making sure they're keeping their losses and their risk in check. Hand in hand with that, I'll just say the last call out probably is AI and its applications, of not just for, buzzworthy pieces to say, hey, we're using AI, but actually AI that can provide cost savings, can provide utility for customers, that can identify fraud, risk, other challenges in the payment stack that can be optimized through artificial intelligence. That's one we're definitely continuing to look at, as are many, and I imagine we'll continue to.
Yeah, I think it was Kevin Kelly. I heard him on a podcast maybe a year and a half ago, and he said AI is just going to be added to everything. Don't think of AI. I'm not quoting him exactly, but he was saying don't think of AI as the thing, but treat it as if you applied an electric motor to X. It could be anything. It could be a drill. It could be a car. It could be, he was saying, think of AI like that. Anything you can apply AI to. So
I love
similar
that.
To what you're saying.
I love that analogy. It absolutely is. It's, I think that, they say that AI will, some people are afraid AI is going to take my job. And I think that the reality is in many cases, AI is not going to take your job. It's a human using AI that will take your job, meaning, get comfortable with the applications of it so you can use it to become better at your job, to do the work that is impactful from a human standpoint, while leveraging these now cheat codes that have come through with technology. And, AI can be fun and buzzy, but really for sustainability, it's about providing that utility that can, have cost savings, make you more efficient, see around corners that a human could not. And so that really, I believe, is the future of certainly fintech, but almost every industry. And it's, leveraging it in the proper way.
Yeah, the back office stuff is RPI, automation, all that stuff is excellent for AI.
Yeah.
But applying it to your particular scenario, I think, is going to be the key for finance, because I can't remember the name of the solution. Was it Mint or Microsoft Money? Really old stuff, which is too laborious for anyone to use. Nobody wants to enter data into something else from your bank or your credit card and what have you. I mean, I can think of one straight away. Decoding gas and electric bills so that you can normalize them to compare them to other providers, for example. None of the providers would do that for you. It's not in their interest.
Absolutely. There's a ton of, there's been a movement in consumer transparency, and that comes with access to data, but it also comes with understanding your data. So there's a lot of these spaces, whether it's your utilities, whether it's healthcare, a number of other sectors where there's a ton. The access to data is real. The gap in the access to data is real. But the knowledge gap is real too. And when you have AI that can make a consumer, an end user, smarter and save them the time of, say, to your example, of giving it all the data points that you once needed to do manually, and no one's going to take that time, you really have the opportunity to enhance your life and your productivity, both in a personal sense and in the work that you do. And again, that's kind of the trend, is not seeing beyond is this, a Chat GPT wrapper, a wrapper on Chat GPT for a company? Is it something gimmicky? Or how do we take a look at my business today, whatever my business is, and think about what are my pain points and how can technology, AI in many cases, really streamline that. And so it will be something that will be, prevalent everywhere. And to your point, is a discussion that you need to have of actual utility and not necessarily one of we have to build something revolutionary, but instead these are my everyday pain points that really shouldn't be this painful.
Yeah, totally agree. I think it's important for me to ask you, is there anything you want to talk about in the payment space that I've missed and that you wanted to share?
Yeah. I guess I would say, we focused a lot on financial inclusion, building a more inclusive financial environment for the future. That's something that we're proud to. Close to 50% of founders that we've backed are underrepresented. And we think that's important for a variety of reasons. The biggest piece is the impact that there are a number of areas of the population that are ignored or underserved. And we see a lot of founders who typically have lived that experience in some way or another, are familiar with it, building solutions for that. And we think that is both the right thing to do, but it's also a tremendous business opportunity in terms of these massive segments. There's certain segments that, everyone tries to cater to. There's a million different products. It's really expensive to acquire them. While there's massive markets with a ton of need that if you understand their need and can build for them, it is both meaningful in terms of a more inclusive financial world. It is meaningful in terms of the impact it has, but also a tremendous business opportunity. So I guess I would just say that thinking about the impact of businesses is not mutually exclusive from being quite profitable, having a great venture backable business. So I would say, part of the future of finance is building that world. And so, encouraging everyone to continue to think about their individual lives and how they can make an impact.
You're only the second person to talk about this, and I'm glad you did, because one thing that makes me really angry, you and I, people like us, we all have credit cards, debit cards, yes. Wallets are almost bursting full of them.
Right.
But for me, it goes back to basics. There's so many cafes, and I'm sure it's especially in Silicon Valley.
Yeah.
Cafes and shops here now starting to say, well, we don't take cash.
Yeah.
And for me, that is terrible, because the ultimate inclusive financial instrument is cash. Everything from a homeless guy that might find £5 or $5 on the street can go and buy food. Now they can't.
Yeah.
Or somebody that's really hard up and their parents just gave them £100. They can't spend it because, for me, that's just nuts. That cash, for me, it should be a legal requirement. If it's legal tender,
absolutely,
it should be enforced that you're not allowed to refuse cash. But let's say we didn't have that problem. Look at the next problem, which is, don't just assume that everybody has a Visa and MasterCard.
Right.
There's so many other ways to pay.
Right.
So I'm really glad that I'm kind of not glad that you're only the second person to mention this, because the other guest I was going to say was Shrap. So I don't know whether you heard of that solution. Have you heard of that?
Yeah.
Oh, okay, right. So anyone listening that doesn't know, it's basically where you can pay in cash in a shop, and the shop can load a card with the change on it. So for anyone listening that doesn't know. And I just can't believe that hasn't taken off. I thought it would grow like wildfire, but that's just one example. So I'm really happy you mentioned that.
Thank you. Yeah, it is. It's often easy, and I realize this especially at Chime, where we're in San Francisco, not typically living the way that the majority of people in the United States live. That we didn't live that experience. So we made an active effort to try to understand, okay, what are the everyday pain points that you have? And to your point, there's a massive percentage of the world that is either completely unbanked or underbanked. And it keeps them in many ways from being participants in the financial ecosystem, has increased costs, has them have not have access to care, a number of pieces that can prevent them from, and there's so many areas that if you haven't lived it, you don't know. For instance, it's if you are coming out of prison in the United States, in many cases, it's actually hard to get a banking product because of some of the underwriting that occurs, some of the approvals, some of these pieces that we're talking about. This is, especially in the United States, there's a large percentage of the population that's incarcerated that then is also left out of the financial system, which is not only a piece of equity in terms of, they have served their time and deserve to be included in the financial system once again, but it also is, if you're putting obstacles in their way, it is making it more likely that they will turn back to other illegal activity because they have fewer options to participate in the financial system.
I don't even understand that, because if you allow somebody to open a bank account and they can't spend anything unless there's money in there, I don't even see what the logic is behind denying anyone a bank account. If you offer zero overdraft, and you can only have a debit card, I don't even understand what the problem is.
Yeah, the fear is, I think, chargebacks and a number of other techniques that can actually create fraud loss for a company. So everyone looks at whether it's your identity that you are who you say you are, running a number of other checks to see basically the likelihood that you might engage in some fraudulent activity. Coming from prison can be a major marker for that. And as a whole, that's not well placed. It needs to analyze the individual, and again, that's also part of better understanding the risk through new technology, and then also opening the markets to those who may be excluded from it. These are pieces that technology will hopefully help improve. That's part of what we're trying to be part of.
Well, that's great. Really happy that you've mentioned that, and as a key focus for your organization. That's really awesome.
Thank you.
I did want to actually use this point then to mention, if people want to find out more about you guys, your website is fiat.vc, so fiat.vc.
That's right.
And on Twitter, you guys are at FIAT Ven, VEN.
That's right.
And yeah, you've got some great companies that you invested in. So I'm sure we'll see some of those IPO at some point in the future and go on to bigger and better things.
Yeah, I like, life is short, and to be able to work with great people and make an impact, that's what it's really about. And I feel so lucky to work with our team is incredible, the companies we work with, and then the impact we're making. That's just, it's such an honor. And I think that, these companies that we're working with, many of them are finding tremendous traction and building, the future of finance. And so, yeah, I hope to see those great outcomes, and no doubt if we keep our heads down, keep building and building the right way, we will.
Great stuff. Well, one final businessy question before we move on to the final fun question. What are your predictions for 2024 in the money payment / fintech space?
Yeah.
And do you do any kind of roadshows, or you going to be at any conferences where people can meet you?
Yeah. So I'll start with that. I'll say one is our go-to conference for sure every year is Money 2020. Money 2020 in Las Vegas. They do have other venues, but that's our main one, where we had this last year. We had a party for about 400 or 500 people, and just a great place to connect. We tend to go to FinCon, some other events. We throw some events in ourselves, LA Tech Week, San Francisco Tech Week, some stuff at our offices in San Francisco. We try to stay active, and so you often can find us in many events.
Great.
As far as predictions for 2024, it's interesting to try to predict anything in this market that really the past 4 years has played in many cases counter to what all of us thought. We'll see, I think, continued consolidation. There are a lot of companies that couldn't raise a kind of an up round, but they were able to get from existing investors. They were able to get capital to stay alive. Some of them have become more efficient as a result. Some of them have unlocked new growth strategies and channels. I think those companies that are well capitalized or have found this unlock and can get well capitalized will be the leaders in consolidation in the market. So I think we'll see further consolidation through 2024. I think, a big one as far as interest rates and mortgage rates, I think they will improve through 2024. But of course,
it's an election year.
Yeah. Yes. but not return to the COVID interest rates that we're used to seeing. People are kind of waiting for that, and there's not a lot of movement in the real estate market. So I think we'll start to see, inevitably, rates will return somewhat to a lower point, and then you'll have a number of people who are really forced because of age or other need to eventually sell their home. Well, the market will start to open back up. There will be same kind of movements in capital markets that are currently there's a lot of money that's standing still waiting to see what happens. So I think we're going to start to see things opening up more and more in 24.
Yeah, I did read the other week that home sales in the US are just gone to zero almost.
Yeah,
because
it basically doesn't happen.
People are locked in on low rates and they just terrified to move anywhere else.
Yeah, they basically say you're whether it's good or bad, you're locked into your house. In some cases, it's great. Yeah. I think it's something like 30% of homes I think have a 3% or under interest rate, which is just vastly disconnected from where the market is today. I think a huge percentage are buying in cash, which again is not realistic for most people, but that kind of shows how inaccessible the home enourship market is. So I think we will see some movement in that market in 24, but probably not enough for what's really needed.
Great stuff.
Yeah, thank you.
And the final question.
Yeah.
What are you excited to be learning about right now? I'm actually relearning something I started probably 15 years ago, but I'm revisiting it now.
Yeah.
Is day trading.
Nice. Learning about or active in it? Yeah.
Well, what it is, I did a 3-day course, and I realized that I could be bankrupt if I get this wrong. So it was actually really good. And that was about 15 years ago. And so I realized by doing the course that it's probably not right for me at that time.
Yeah.
But now my headspace is kind of different, and I've got the patience and the time to learn it properly. So I'm actually really excited about it, and I've bought a course, and it's quite a few modules to go yet. It's on currency trading.
I love that.
But again, who knows whether I'll be successful at it. But
yeah,
in addition to like regular buying and selling stocks, I wanted to do something else, because buying and holding is what do you do in the meantime?
Yeah.
So yeah, I'm looking into that. How about yourself?
Yeah. Well, I'll give you two things, because the first thing is my 7.5-year-old daughter is learning piano, and I am just really enjoying kind of learning with her just a little bit. So she's already light years ahead of me, but doing that with her. But I imagine that's not the answer you're looking for. So I'll tell you. Oh,
Kara.
Oh yeah. But the other piece, in all sincerity, that is related to technology, is understanding actually how AI works in many ways. So it's can I sit and have the conversation about how this could, let's look for inefficiency, and knowing that hey, AI could probably help, technology and machine learning can probably help here. Yes, we can have that conversation in many cases, but I actually want to understand. So been reading up and trying to understand on how neural networks actually work, and some of kind of the nuts and bolts to really understand the technology, understand the opportunities and the risks. And so that's probably the biggest area that I'm trying to understand, not just what's investable and what isn't, not just how can it be applied to existing portfolio companies, but truly the inner workings of it, to the extent someone non-technical like myself can understand that.
Great stuff. That's interesting. You're doing the opposite to me. So I've always been fascinated by tech, worked in it for 20 years. I was always keen to learn how stuff works.
Yeah.
But it didn't help me in my goal to start a business, because I overanalyze everything to death.
Sure.
So I now actively do not learn about how tech works. I consciously don't do it, because I can read that stuff for months and achieve nothing.
Yeah.
So it's interesting. I've gone the opposite direction to actually do stuff, put things out there.
Yeah.
And I think, but to be fair to myself as well, I think what's helped is all these no-code tools.
Oh yeah,
You can achieve in 5 hours what might take you a year to do before.
definitely. I think some of it is
I mean,
you need to pick your spots that you want to dive deep in, and some of it you just know that it works and that's okay. I think it's some of it is just knowing the power of it, wanting to understand it more, and wanting to be able to, I think, get creative about some of the applications. When ultimately understanding that technology, I hope in strategy sessions can help me think of, well, what if we built this way, or maybe there's opportunity to build a business in this segment based on this learning, based on this data input. So that's really something I'm hoping to be even the tiniest bit educated in, so I can try to do my part.
That's great. Well, that's a big topic you've chosen to learn. I think if I went into AI, I'd need that pill in that movie, Limitless.
Yes, most definitely.
Just to consume it all and retain it.
Absolutely, yeah. That's why I said just the tiniest fraction that I'm trying to learn, and hopefully that'll be enough.
Great stuff. Well, I'm looking forward to seeing all the companies you guys invested in future and help to build. Wish you all the best in future success, and your co-founder as well.
Thank you so much,
and thank you for coming on.
Thank you so much. It's been a pleasure.
Cheers.